Our conditions bullish in this bull market as markets are continuing to find some strength here. If you're new to this update in the morning, just a quick overview. Essentially, this is really designed to give you the 30,000 foot perspective. It's essentially what are the current market conditions? Where are we at in the trend? What's the price activity doing? Are we running into support resistance areas? Do we have confirmation with breadth? Do we have interest rates and economic things that are happening based on interest rates? We'll take a quick look at commodities. We take a quick look at least gold and oil and silver. And really that's the core of what we're looking for is what are the market conditions. From there, we've got other videos and other analysis to be able to say what to do with that information from there. So if you're going through, these are really just designed to say where are the market conditions at currently. So in this case, we'll take a quick look at the futures as well, pre-market. That does give us a little bit of a different view. We're up slightly, 0.23 this morning. And again, one of the things that we're analyzing is we're looking at current trend. We're looking at current supply-demand locations of that trend. We're looking for compression of trend and expansion of trend using the trend condition indicator. Compression of trend looks something like this. Expansion of trend looks something like this. This helps us know, are we late in the trend or are we early in the trend? Okay, that's the value of the compression of the trend. So when we're just eyeballing this, we can quickly say, oh, okay, we're consolidating. We're compressing that trend. From there, those trends expand out this direction or expand this direction. So market conditions currently, S&P 500, we know that we're expanded in this trend. We can go out one more time frame. If I come back to S&P 500 and go to that weekly time frame and look at the market represented by this current trend profile of the trend condition as well as the price activity to say we're just late in this trend. Okay, the probabilities of us going aggressively higher are just pretty small right here. Okay, and so we certainly could see more higher activity and even see an exuberant push higher, but more than likely that's just not the case. So then from there, what do? We've got to be able to manage our trades and manage our portfolio based on where the market is in the trend. So really that's the goal of these morning updates is to just give a quick overview of where we at in those trends currently, and then from there, how do we manage those decisions? How do we manage the trend? We obviously can't control what the market is doing or force our hopes and dreams and wishes on the market. We simply are following the price activity from there and focusing on how to position based on risk, not necessarily just saying we're just gunslinging and we're buying whatever it is that has a hot new name. It's simply what is the market condition doing, managing our portfolio effectively with that information. So S&P 500, we're bullish in this uptrend. We're at the top end of this range. The trend is expanded, but it's still bullish, meaning that we still have an overall uptrend. We're moving sideways in that trend. We have resistance areas, which are supply meaning people ready to sell at this location. Demand right here means people ready to buy at this location. So when you see these areas, or if I talk about supply and demand zones, it's just simply support resistance zones. It's where buying could come in. It's where selling could come in as well. So these are ranges that we're starting to see. We're running into a supply block at the upper end of the trend. What does that mean? It means one of two things. We could break out of this trend and head higher, which would continue to be additionally bullish, or we could be rejected by this and push back down to support. We know that we're at the upper end of this trend already, and so those are the two scenarios. And if we do get a breakout, how aggressive could that breakout be based on where we're at in this trend? Is there a really high probability of a breakout and us going aggressively higher based on what we know about interest rates being flat, 4.5%, 5.5%, inflation still rising slightly, the Fed doing nothing yesterday because they're still worried about inflation? Okay, this is the economic and the price data portion of what we're focusing on. From there, we've got to decide how to profit from that. Okay, so if you're new to these updates, that's essentially what we're focusing on. So going from there, we want to take a look at the participation of this trend. We do that using this indicator, which is the number of stocks above the 50-day moving average. Okay, and I think I changed that. Let me go back to and slide this over just a little bit back to this range. So we're sitting right at 50 on this. So we've been working our way back. Even on this indicator here, we get this expansion, we get compression. We're moving back up above this 50. This 50 means that 51% of stocks in the S&P 500 are above their 50-day moving average. And that is, again, it's about flat. We're not necessarily seeing extreme to one side. We had been relatively extreme. 10 is really extreme, but we got down to that 16, 17 number and then rallied from there. So we can also look for opportunities to see, are we at a support area here and are we at an oversold area here? There's probably going to be a bounce, whether that means it's going to continue to move higher or whether it means the market ultimately is going to reverse and come back down again. That gives us an indication of the quality of the rally. And right now we're right in the middle. It's not extreme one direction or the other. We add the VIX into this, which gives us our volatility to say, is there fear in the market? Is there greed in the market? Okay, it moves quickly. It's based on S&P 500 options, premium put options. So if you're getting a lot of put buying, you're going to see a large spike in this like this. If you don't see that, or if you don't see a big widening of extrinsic value in those put options, then you see it start to come back down again. So a bearish VIX means a bullish market. A bullish VIX means a bearish market. So when we come in and look at this and say we're 14 to the downside on the 1-day chart, that means that VIX is moving lower on the 1 hour time frame as well as the daily time frame. That should also give additional confirmation to say that the S&P 500 is bullish still, based on, or at least it's not at an extreme. And as of right now, because this can move pretty aggressively from day to day and from hour to hour, but as of right now, there's still some bullishness. The market really shrugged off what the Fed was discussing yesterday. From there, we want to take a look at bonds, because bonds and yields ultimately are what rule the economy. If you don't know that or believe that, spend some time studying interest rates. It's what makes the world go round, honestly, when it comes to business and when it comes to finances. And in this case, we have a yield issue and a bond issue when it comes to what the Fed is trying to do with inflation and economic growth and all the things that are coming along and all the discussion points that are talking about it. We can take a quick look and see what's the bond market telling us. The bond market is telling us it's moving higher. The 2-year Treasury is moving lower. We've got a compressed trend on the 1 hour time frame. So that compressed trend, meaning that it could expand one direction or the other. This is looking like it's more high probability as it's compressing, and we're bearish. Okay, we want interest rates in this case to be bearish on this 2-year Treasury. So as it's starting to trend this direction, is this going to be the new trend from this compressed state? Ideally, that's the case. That adds a little bit more confirmation. If we get lower interest rates, stocks typically like lower interest rates because it means there's less friction in the economy. There could be more potential for more profits. That's what the stock market is looking for always. Where are the profits? Where is the growth? Is it going to be increasing or decreasing? Interest rates are just they add massive friction to that perspective. So we want to be able to talk about those as well. TLT, the long end of the yield curve, the 20-year plus Treasury bonds, and those are continuing to go down, but getting a little bit of a move back up again. So we want to see bonds moving higher. The corresponding rate with that obviously would be lower. So we're seeing those two things as well. Notice the two yields, 4.19 and 4.5. They're basically flat. Okay, this chart here is the yield curve. We want to see an increasing yield curve. Okay, when we have an inverted yield curve, we're lower than this yellow line right here. So yield curve moving in the right direction as well. So there's several things that in looking at some of this price data is important. From there, let's just jump over and look again at price trends on Dow Jones Industrial Average. We're majority bullish at 14. Again, that majority bullish, I'm talking about this price indicator, the trend condition indicator, which is basically made up of 14 exponential moving averages. They're very responsive averages, and when all of those averages are moving in the bullish direction or the bearish direction, then that gives us additional confirmation to the power of that trend. When we see those start to shift, This now is 13 and 1, then the trend is starting to soften. Okay, and we'll get that down where it goes, 7 and 7. We might find some here as well in just a moment. Here's a good example on the triple Qs. Triple Qs 1 hour time frame. We're seeing that. Also, it fell off the table here yesterday or a couple of days ago with some of that Chinese AI information, and tech stocks really got hit hard. We're getting compression on the 1 hour time frame here as well. Let's jump over to the Russell 2000. Seeing some weakening here on the Russell on the 1 hour time frame, where we've got a neutral trend bias, compression of trend, and a retracement happening here. That looks more like a retracement on the daily time frame because our uptrend, our confirmation or our consolidation inside of compression and a bullish trend. It's weakening, but it's weak, but it's strengthening slightly based on some of this daily price activity. Again, good confirmation for the market as a whole when you have small cap stocks participating as well. That means that investors are willing to put their money to work on more risky assets, and that also adds to the to the breadth of a bull market trend. USO getting a retracement here. This is oil, the oil ETF, seeing a pullback here in the price activity, a deeper retracement now all the way back to that 382 retracement. And I've mentioned before, we want to see it hold up in trend, the 236 area. This is going to be an area where we want to see continued momentum. When it breaks back down and gets down into this 382-618 area, that's more of a corrective counter trend location and can take some time to really bounce from there. So we'll see if we get any momentum shifts here in USO. GLD also showing this is a nice bullish price pattern. We talked about the most recent highs right here, the all-time highs in gold, and the compression of this trend as it had expanded. We got a little bit of a pullback here intraday. This is that's a 1 hour time frame on this chart. This is a 1 day time frame on this chart. And again, a bullish price pattern with momentum moving into the upper end of that range. A couple stocks to consider today as well. CCB in the scans. Again, if you want the filters for the scans, you can join the Discord room, there's a link in the description. That'll get you these settings here as well. A little bit deeper in the trend here as well, but getting a nice bounce off of that 236 on CCB, and then GRAB also had a nice confirmation bar here this morning, increased volume, not quite back up into momentum, but pulling out of that corrective zone. This is a 382618 retracement and finding support at 50%, and then getting confirmation back up above some resistance right here. You can see it kind of peaking right through there, closing above that area. That's a good, strong, solid push to say that there's enough demand there. There's enough bulls buying into that to push it up above one of these resistance areas. That could add for some additional confirmation to additional traders to be looking for more momentum to that upside. A little bit longer post today. Hopefully you find value in it. If so, please like the YouTube videos. We don't get a ton of viewers on here, but trying to grow the channel so that we can present this information to more and more people that find value in it. And if you find value in what we're presenting here, you can like that page and would surely appreciate that. That'll do it for today's update. Everyone have a fantastic day today.